Hello friends, in the series on the income tax cases, today we will discuss the case of Income Tax Officer versus HMT International Limited. This case has been reported in 85 ITAT Tribunal at page number 18. The matter has been decided by Bangalore ITAT A bench and the date of the judgment is 2nd December 2020. This case is related to the assessment year 2009-10 and 2012-13. And in this case, the accounting standard 9 is discussed and the concept of accrual of income is discussed. As all we know, according to the accounting standard 9 and according to the Companies Act, the assessee has to follow the accrual system of accounting in case of companies. The accrual system of accounting says that whenever an income is accrued, the assessee has to take that income into its books of accounts and consequently the Income Tax Act comes into play and the assessee has to pay tax on that. But there may be unique cases when there is a lot of uncertainty to the receipt of the income which the assessee is taking on the basis of accrual system of accounting, and when this uncertainty prolongs for a long period of time, then the very practical difficulty comes that the assessee has to pay tax on every year on the accrual income and the assessee does not have the funds to pay the tax. But in actuality, the assessee is not receiving the income. The case which we will discuss today, the facts of the case are similar to that. So this case is very important for dealing for all those cases where the assessee is not actually receiving the income, but there is accrual of income. In this case, the assessee was dealing with a engineering industry commission of the government of Ethiopia for supply of some machines. That is why the assessee has to receive the payments from the engineering industry. This payment was not received by the assessee, but there was a clause in the agreement that if the assessee will not receive the payment, then the assessee will receive some interest. So the assessee was taking this income on the basis of the accrual up to the assessment year 96-97, but after that the assessee felt that there is a lot of uncertainty that whether this amount will be received or not. So the assessee stopped accruing this income into its profit and loss account. But after 96-97 up to 2012-13, the assessee was showing this amount as its income into the notes on accounts and making the full disclosure. When the assessment was going on, the assessing officer said that the assessee has to take this income on the basis of accrual concept and has to pay the tax. So the assessing officer made the appropriate addition. When this matter came to the CIT appeal gave the relief to the assessee, so the department moved to the ITAT. When this matter was listed before the Honorable ITAT, the ITAT said that there is a lot of difference between the receipt of the income or the accrual of the income, or in other words, its collectability and its accrual. The ITAT said that as the time passes, the income accrues, but if the assessee is not receiving the income since a long time, like 12-13 years, and even the amount has not been received by the assessee, because in this case the assessee's final settlement was at 7% of the total amount which was due to the engineering industry commission of the government of Ethiopia. So actually the main amount was not received from the second party. So the ITAT held that in these type of cases, according to the accounting standard 9, which says about the recognition of income, if the assessee is not receiving the income or is not this income is not collectible, then there is no point of denying the claim of the assessee that this income is not taxable. And the ITAT held that following the accounting standard 9, if the assessee has not accrued this income into its books of accounts, has not taken this income into its profit and loss account, then there is no lacuna in that, and the assessee is not bound to pay the tax on that. So this case is very important in all those cases where actually there is a big uncertainty about the receipt of income, but the accrual principle says that you have to accrue that income. In this case, two cases were relied on and followed. One is CIT versus Vasist Che Vepar Limited 2011. This is the case of Delhi ITAT, and the another case is of the Supreme Court judgment Southern Technologies Limited versus Joint CIT 2010. At the end of this video, once again I am repeating the name of the case. The name of the case is Income Tax Officer versus HMT International Limited, and this case has been reported in 85 ITR Tribunal at page number 18. The matter has been decided by Bangalore ITAT A bench, and the date of the judgment is 2nd December 2020. Thank you, friends.